Well, good evening and welcome to this live stream on the 22nd of April 2025. It's Martin North here from Digital Finance Analytics. Great to have you on this evening. Thank you very much for coming and spending some time with us on a Tuesday evening. And a very important conversation tonight about the future of the financial system. No, nothing material, right? Just a few conversation points about that. And I'll bring Adam in just a moment. Just before I do, I will remind you, as I always do on these shows, that we're not providing specific financial or legal or political advice. It's a general conversation. We moderate the chat to please play nice, but also throw your questions and comments in as you go. I won't necessarily follow everything that people say, but there's a lot going on in the chat. It's all quite interesting. If you want to ask a question, and either to me or to Adam, if you use Walk the World, that'll get it into my queue, and that means that there's a really good chance that I'll be able to put it into the conversation live. I've also enabled Super Chat, and if you'd like to get your question top of the list, or indeed make a contribution to what we do around here, that's the way to do it. Always greatly appreciated. And for those who do support us via Super Chat or via Patreon, really appreciate your help. It really makes a difference in terms of doing what we do here. We don't just profit. We do this because we think there's a really important conversation to be had. Right, let me bring Adam straight in and we'll get going. Adam, welcome.
Martin, good to see you.
How are you?
Wonderful. It's an interesting time to be alive, my friend. We can see many things happening in the world around us so quickly, it's hard to make sense of it.
Yeah, I was going to say, where is the compass and where is north? It's difficult to know. You've been busy, in fact, interviewing a few of the candidates recently, Rennick and Andy, to name but two people I had on my channel. Well done on those. I think it was really good to have, some powerful insights coming in from in and around the election process. And we'll get on to the election a bit later. But I guess we should really start with this question of what on earth is going on with the financial system. And, there's lots of different ways we could start this conversation, Adam. But to my mind, one of the most interesting is just to look at this chart, right, which shows you what's happened with the DXY, in other words, the dollar relative to other currencies, and what's happened to bonds. Now, with everything that's going on, you would have expected the exchange rates to be strong, and you would have expected the bonds to be weaker because, of course, normally the US as the dollar reserve currency, you would expect to be there at the center of things, but it's not. And this, for me, is a really important symbol of a question, which is the financial system, as we've described in other shows, supported through high levels of debt, now under duress? And what does it mean? And, as we'll talk a bit later, what are the alternatives? What's your take on what's going on?
There's so much to unpack, isn't there? So let's go right back to the basics. All fiat always fails. So this collapse was going to happen sooner or later. The question is it a planned collapse? Is what Trump is doing right now, is it part of his plan? So we'll go to two extremes. Let's get the two extremes and we can dial it back. So on the spectrum, you'd have those who hate Trump and say he has no idea what he's doing. It's complete chaos. He's evil. He's a dictator. He's just clutching at straws and throwing out tariffs and hoping for the best. That's one extreme. If we go to the other extreme, we say, well, in fact, this guy's a billionaire. He's been harping on the same message for many years, for decades. And he was talking about putting tariffs on other countries, at least to equalize the tariffs that have been put on the States, ever since his appearance on Oprah, all the way back in I believe it was the late 80s. So there's one thing for sure, that his message has been consistent and he has always wanted to do this. We can also see that in his first term, he did something similar, but not to such a great extent. Some would say that he didn't go hard enough or fast enough early in his last tenure. So I tend to lean more towards this side that, first of all fiat will always fail. Second of all, Trump is not just randomly throwing out tariffs. It's part of a bigger plan. Third of all, things are moving so quickly that we haven't seen this pace of macroeconomic change, I think, in our lifetime ever. We have now the internet of information where we can all interact so quickly with each other and track what's happening around the world so quickly. But equally, you now have a businessman, a billionaire, running the biggest economy in the world. And typically we're accustomed to actors or politicians running economies, but we're not accustomed to businessmen running economies. And consequently, whatever's happening it's happening very quickly and very, some would argue, violently. I'm really looking forward to seeing what's going to happen over the next 3 to 6 months. And the reason why I'm looking at those 3 to 6 months is because the midterms are coming up for Trump, and whatever he's got to do very quickly. So as he enters into the midterms, he can go forward and say, this is what I've achieved, as opposed to this is what my failures are. What we're also seeing is we're perhaps seeing the decoupling of the global village, that global village of where we were told that globalization, where we're all working together, was very good. But in some instances now we're seeing it's bad. If we go back to COVID as an example, we could see that when the world was shut down, many supply chains were equally shut down. And as a consequence, many nations realized how dependent they were on each other. Now we've got the big boys fighting. And the big boys, let's face it, is China and the United States. And neither party is backing down, certainly not in front of the camera. And each party is ramping up their attacks per se against each other. What's fascinating about this relationship, Martin, is that you've got these two super economic and military powers facing off against one another. And they're as equally in bed with one another fiscally as they are opposed to one another militarily. So there's this fascinating dynamic that we're seeing where two enemies are so dependent on each other. In simple terms, China needs America's capital markets, and America needs China's production markets. And once we start to see this conflict between these two markets, I like this saying that America sneezes and Australia catches a cold. What we can see it's more accurately is that perhaps if China and America sneeze, the rest of the world catches a flu. And that's what we're seeing at the moment, is this great reset. Now, whether the reset was planned or a consequence, that's up for debate with many different opinions of what's actually happening around us. But it all leads to the layer one of all of it. It all leads to money, the money markets. The layer one to everything that we do in life is about money. If you want to look after your family, you need money. If you want to look after your church, you need money. If you want to sit on the couch and watch Netflix, you need money. So no matter who you are, where you are, or what you want to do, you need money. And what you and I agree on entirely is that an unlimited printed money is hurting all of us. When they keep printing this money and those at the very top get to front run the value of that printed money, all of us at the bottom suffer the pain of inflation. Inflation being the inflation of the money supply and the reduction of purchasing power of the money that they keep printing at the top. So you know that I'm the Bitcoin guy, but I'm primarily an economics guy. That's my background. And I believe in the free market, but I also believe in a hard money. And what we can see at the moment is everyone's fleeing for the exits. And typically when the US dollar is falling, it's a sign of ironically, a stronger economy. But at the moment, it's this very weird situation where the United States economy is in pain and the value of their dollar is falling as well. And people are pulling out of the US dollar. They're pulling out of the bond markets. The 10-year is in a real mess at the moment. Even the 2 years in a mess. And what we can see, as a matter of fact, is that people are going to a hard money. And the two hard monies they're going to at the moment is in fact gold and Bitcoin. And we can see this with gold hitting an all-time high. Peter Schiff would be very happy with gold hitting that $3,300 mark. Where are we at today? Have we gone to
3,479 at the moment?
Yeah, it doesn't surprise me. It's moving so quickly. And so now I want everyone to do a thought experiment. If you've got millions, billions of dollars perhaps, and you want to pull out of the US dollar and you want to pull out of the bond market and you want to park your money somewhere, it goes back to our eternal question, where do you put your money? So what you'd have to ask as an investor right now, I'm glad you've got that chart up. Would you really want to put all of your money at the top of gold's price? Now, maybe you would, but you've got to admit, buying a top is pretty risky. It doesn't matter what it is, whether you're a gold buff or not. To buy anything at a top is pretty dangerous. Now, that's not to say that people aren't parking their money in gold, and we can see that. We can see people fleeing the exits of fiat, fleeing the markets, the bond markets, and then moving into gold markets. But if you look at Bitcoin, the digital gold, equally Bitcoin is performing exceptionally well. But the difference between gold and Bitcoin at the moment is that gold has hit its all-time high, whereas Bitcoin has pulled back over recent months from its all-time high. That is, there is a great opportunity at the moment, many believe, that if you get into Bitcoin now, you've got 16 years of data, you've got the biggest economy in the world using it as a strategic reserve. You've got the biggest fund managers in the world offering it as a spot-backed ETF product. You've got lots of institutional and retail investors moving into Bitcoin. And you've got this beautiful dip at the moment with Bitcoin currently at 88,400. I got
470.
88.5. Yeah.
Yeah.
Slight variation in data sets, but we'll go with the 88.5 US. And the all-time high for Bitcoin is $109,000. But we have forecasts that my forecast is that the absolute minimum of this bull run is going to 147,500 within the next 6 months. US dollars. But there's bigger forecasts where it's going to $250,000. But even if you're not that bullish on Bitcoin, the reality is you've still got $20,000 to play with there to get to its all-time high of around $109,000. So it comes down to this, Martin. Where do you put your money? Where are you going to put it? Are you going to put it in real estate? Are you going to put it in bonds? Are you going to put it in the US dollar? Are you going to put it under your mattress? Now, for us mere mortals, when you've only got a little bit of money, you don't really think about these things. But when you're talking about nation states and institutions and rich people, they've got to put their money somewhere and they're always thinking about it. The reality is, if they leave it in fiat, any fiat, it constantly loses its purchasing power. So where do you put it? So, well, I'll put it in a bank. Well, the interest rate is not meeting the inflation rate. So that's not giving you a good return. And of course, with bail-in and bail-out laws, more importantly, bail-in laws, where they can confiscate your money, which we're seeing over and over again around the world, you have to say, well, where am I going to put my money? Well, if you put it into the US markets, evidently they're not performing so well. So now people are saying, well, where do I put my money? And the market is speaking the truth. The truth is always in the market. And the truth is the two best places to put your money at the moment, according to the market, is gold and Bitcoin. Gold protects you from inflation, but Bitcoin absolutely decimates inflation. That is, it goes way better than gold performs. Very simple historical lesson. An ounce of gold typically buys you a men's suit and a pair of shoes, or a toga and a pair of sandals if we go all the way back. Whereas Bitcoin's purchasing power over time keeps getting bigger and bigger and bigger. 5 to 10 years ago, you needed thousands of Bitcoin to buy a house. Now you only need 3 or 4 Bitcoin to buy a house, depending what house and what area, of course. And over time, it's going to go to 1 Bitcoin per house and then half a Bitcoin to buy a house. So what's undeniable is that the purchasing power of Bitcoin keeps getting stronger and stronger and stronger. What's also undeniable is that the purchasing power of the dollar keeps getting weaker and weaker and weaker. And what's also undeniable is that gold kind of holds its purchasing power. So putting all egos or emotions aside, you just want to look at the numbers. And the numbers show us that if you hold your value, your wealth, your money, your purchasing power in dollars, you're going to lose that purchasing power. If you put that money into gold, you're going to maintain that purchasing power. But if you put that money in Bitcoin, you're going to increase your purchasing power. So where would you put your money?
Funny we got onto Bitcoin that quick. Now,
it's the new money, my friend.
Yeah, well, the financial. Let's talk a little bit more about the old financial system just before we get into the Bitcoin alternative. And this slide here is actually quite useful, right? So the first thing to notice is the DXY, which is the index against other currencies for the dollar. You can see how it dropped on Liberation Day, sort of clawed its way back up when there were discussions about tariff delays, and then it fell again, and then it's fallen further with regard to Powell now threatening to fire. Trump threatening to, I'll get around the wrong way. Trump threatening to fire Powell. The other thing to notice is that the Wall Street bankers have cut their S&P 500 targets. So the financial system and the dollar is looking pretty sick. And so that's a really important observation in terms of what's happening. But when you actually drill down, to my mind, you can talk a little bit about the tariffs. And of course, the China-US tariffs massively to the point where that trade is almost going to freeze there. The other 10% tariffs, they're in negotiation. Not sure whether it's going to play out. But I want to focus on the other thing when Powell is calling for when Trump is calling for Powell's termination cannot come fast enough. But I want to take you to this one, which is effectively the latest from Trump, right? This came overnight, which is basically saying we want preemptive cuts in interest rates. If we don't get cuts, then we're going to have a slowing of the economy unless Mr. Too Late, a major loser, lowers interest rates now. And then he refers to Europe lowering, et cetera, et cetera. Powell has always been too late. So there is a contention around monetary policy. And of course, the central bank is meant to be independent. And that's part of the problem. And of course, there was an article this overnight, again, Wall Street Journal opinion piece, the fire Jerome Powell market rout. And market fears Trump might fire Powell, and that wouldn't necessarily do the markets much good. It's a recipe for more market uncertainty. The tariffs will cause at least one time increase in prices of tariff goods, but it may become more entrenched if the Fed accommodates them by cutting rates. And markets are spooked because they don't know if Mr. Trump listens to anyone but his own impulses. So there's a particular take on what Trump is doing. Now, my perspective has always been, Adam, that we don't know whether there is a plan below the plan, as it were, or whether, as you say, it's just sort of bouncing here and there and everywhere. My own feeling is there is a bit of a plan below the plan. And I would remind you that when those markets rocketed up after the tariffs were announced and then they were withdrawn, and I remember Trump and his cronies were in the White House celebrating the amount of money they'd made when the markets went up. And my observation is it's funny how the rich are actually able to make significant momentum when things are actually moving around a lot, and that's part of the challenge, really. And I don't know whether you saw this, but Mohammed El Arin made this post. He said, Wall Street's biggest banks reaped about $37 billion in trading revenues in the first quarter of the year, their best performance in more than a decade. This is a reminder that as intermediaries with the ability to widen bid-offer spreads, these banks often benefit from financial volatility, provided markets don't malfunction as it did in 2008. And that's the point I want to make, Adam, that this market volatility, there are winners in all of this, right? And there are winners with big amounts of money to play with and big positions to take. And this is something I think that people need to understand, that not everybody is losing out, but ordinary people potentially are going to lose out, particularly in the US. And there are some adverts now running where the motor dealers are advertising cars for sale before the tariffs come in because they're going to go up by 25%, right? And, across many different categories, prices are going to go up. So who's going to pay the price in the short term? It's going to be many people within the US. But more broadly, this speaks then to the question of, well, what is the nature of the relationship between government and the Fed? It's been independent, sort of, for the last 100 years or so. Is this the end of that independence? And if it is, what does that mean? Now, I'm no friend of central banks. I think they've stuffed up majorly. I think they created the inflationary spurge that we got in 2007 and beyond, and very much through COVID. They've been part of the problem. But the question is having Trump effectively setting interest rate policy too a good thing? I'm not sure it is, because of course there are going to be political motivations, and of course he's now saying, oh, if we get a recession, it's Trump's fault. It's not Trump's fault, it's Powell's fault.
Well, if you actually go back, so in crypto, first of all, we are very comfortable with volatility. We love volatility. The price of performance is volatility. That is, the price of volatility is you get exceptional performance. So we're very accustomed to it, and we can see that the S&P 500 and many of the traditional markets have been more volatile than crypto over the last few months. When it comes to the relationship between the Fed chair and President Trump, or any president, the reality is that Trump has no power over the Fed. He cannot sack the Fed chair. He knows it, everyone knows it, which is why he's playing these business games of putting social pressure on the Fed chair to do what Trump wants to do. It is no secret that the United States president, no matter who it is, left or right, male or female, black or white, anyone, they have no control over what the Fed chair does, no control whatsoever. What's also no secret and a matter of fact is that the reason why we have inflation isn't because you and I bought a bar of chocolate. It's because central banks printed more money. I can't inflate the money supply. You can't inflate the money supply. Only central banks, and arguably through fractional reserve lending in retail and commercial banks, they inflate the money supply. But then, of course, you have this very interesting dynamic between government and the Fed. We'll stick with America at the moment, where the government can't print money, but the government can print IOUs, aka treasury bonds. So, you've got this fascinating relationship between the government, who's elected by the people, and the Fed chair, who can't be sacked by the president that was elected by the people. And the Fed will print money if the government issues IOUs. And then when inflation gets too big, they both look at each other and say, well, it wasn't, the government says it wasn't me. I can't print the money. And the Fed says, well, it wasn't me. I was just doing what the government told me to do. And yet we all suffer down at the bottom end of all of this mess. So what Trump is doing, in my opinion, and it's pretty clear what he's doing, is that he is forcing through economic conditions to make the Fed drop the interest rate. And there's two main reasons why he wants to drop the interest rate. First of all, if you look at the US debt clock, we're at $37 trillion US that they've got to pay. And a lot of this debt is coming to maturity. That is, it's about to be reassessed. And Trump has been given, whether you like him or not, he's been given basically this flaming turd burger that he's got to somehow put out. It didn't happen under him. It didn't happen under Biden. It's happened over many decades of this broken fiscal system. And you now finally have a leader in place who's actually going to do something about it. Someone has to do something. Fiat was about to collapse. The US dollar was about to collapse. So we can see that the DXY is in trouble. And even if you say, well, no, in the past, the dollar was getting stronger. It's not so much that it was getting stronger. It was just that it was getting less weak compared to all other fiats. And I can prove this. I can prove it quite easily by saying, well, can a US dollar buy more today than what it could 10 years ago, even on the global stage? And you can see the dollar is losing its purchasing power within America and externally to the world. Now, when other fiats collapse, it looks like that they've got more purchasing power because what they're compared to is it keeps falling down further. Therefore, in contrast, the US dollar would have more purchasing power over another fiat that has just fallen through the floor. We bring it back to the United States. What Trump has to do is he has to actually force the conditions, if he wants interest rates to go lower. I should preempt it with that. If Trump wants these interest rates to go lower, and the reason why he wants to go lower is, of course, to deal with the debt, but also stimulate the economy so people can start buying houses, buying cars. When the interest rate is low, not only does the US government have a lower interest payment to pay on their $37 trillion, but equally, all the people within that economy have a lower interest rate to buy their houses, their cars, whatever they want to do. So because he does not have the power, or any president does not have the power to lower the interest rate, what he can do is he can force conditions or create conditions that force the Fed to lower the interest rate. And in my opinion, in my observation, and even listening to what Trump is saying, that's exactly what he's doing. He is forcing a recession, and I just put everyone at ease, if you will. America was already in a recession. If you recall, under Biden, all they did, what's a recession? 2 negative quarters. And all Biden did when they're already in a recession, their administration said, oh, we're just going to change the meaning of a recession. They literally changed the definition of a recession to say, well, we're not in a recession. But they were already in a recession. We can see that through multiple data sets. Now, if we've come out of that recession, and when I say we, I'm talking about the global network, primarily the center of gravity being America. If they've come out of that recession and the interest rates aren't dropping, and Trump needs the interest rates to drop for those two main reasons that I described, he can't tell Fed Chair Powell what to do, but he can create the conditions that force Fed Chair Powell to lower those interest rates. And at the same time, in pure Trump fashion, because he's a businessman first before he's a politician, he's acting the way a businessman would. If you read Trump's books, he's always leaned on the media. He's used the media in many beneficial ways to himself. Even if you look at the last election, when he had the entire media machine against him, there was calculations that he basically got free media coverage of hundreds of billions of dollars worth of media coverage that he never had to fund because the media was so in his face. He just used it to his advantage, and it obviously worked because he got elected. This time he's doing the same thing. He's just cranked it up to 100, where he's constantly tweeting, he's constantly in press conferences, he's constantly answering questions. He's answered more questions, as I understand it, in his first few months as president. In his first few months, he's answered more questions than Biden did in his entire tenure. And that just goes to show that he's quite accustomed to being in front of the camera. So ultimately what it leads to is this. Trump needs to lower the interest rate. He needs that interest rate lowered. And if that means creating conditions, macroeconomic conditions that force the Fed chair to do it, or putting individual human pressure on Fed Chair Powell to respond to what Trump needs him to do or wants him to do, it doesn't matter. The same outcome is desired by Trump. He needs a lower interest rate. But irrespective of what happens, Martin, if the Fed holds the interest rate, increases the interest rate, which I think is unlikely, although there are some indicators that suggest that could happen, or reduces the interest rate, What is inevitable, my friend, is that money printers globally are about to go brrr, and the money's about to pour out again. We are all primed globally, because it's fiat, to deal with the fiscal mess of fiat, of paying off this debt with more debt. And consequently, no matter what happens, the money printers are about to be turned on. A huge injection of global liquidity is about to be poured into the market. And the consequence of that massive injection of global liquidity is gold and Bitcoin are going to go up. Now, other markets might go up as well when it comes to housing markets. The bond market is an absolute mess at the moment. I've got the 10-year up here. I'll just bring up the 10-year on my data set here. What are we at? 4.42% for the 10-year. And for the 2-year, we're at 3.806%. And people are dumping those bonds like there's no tomorrow. They're dumping the dollar, they're dumping the bonds, and they've got to go somewhere. We don't have much time. Something big is about to happen.
Yeah, I agree with you about the something big, and I'll put those on screen. So there you go. That's the 10-year at 4.425, the 2-year at 3.8, and the 30-year, which of course is the long bond, 4.9. Now those are very high rates, and it's interesting. Vanessa made the point earlier on that, in fact, whilst the Fed can sort of influence rates, it's actually the bond market ultimately that determines where rates are going to go, and that's really the issue, right? So effectively, if the Fed wants to try and drop rates more, then they're going to have to start buying bonds. If they buy bonds, they need to have funds. That means they're going to actually need to have more liquidity. That means that they're going to have to issue more bonds in the first place, government bonds, so that gives the Fed the ability to be able to buy. So you can see how this Ponzi scheme process is going to continue. And we're going, as you say, there's going to be another leg up. And by the way, just to give you a different context as well to think about, did you see this cartoon? This was actually came out, the battle of ideas in Australian politics, right? Just spray a bit more money around the place. That's to do with housing or whatever, right? Both sides of politics are just spraying money. And there you go. That's more inflationary pressure, because, of course, the question you've got to ask yourself is, why is it that we had these massive inflationary bursts? It's absolutely to do with the money supply. The more the money you put into the system, more money chasing the same goods puts the price up. And that's what we've seen perpetually for a long time. And your earlier point is, well, so how do you insulate yourself from that? Because, of course, I talk about the value anchor. Where do you hang your hat when it comes to value? Because you can't really hang it on the US dollar. You can see where that's going. You can't necessarily hang it in the bond market at the moment. Where do you hang it? And that's, of course, the critical question about, well, what is the future of the financial system? And I think one of the things I always come back to, Adam, is we need to sort of strip out the difference between transaction flows and making payments and things when you actually go to the shops, and this international plumbing that effectively drives the way that the financial markets run. They are connected, but they're not the same.
That image that you brought up is so powerful, even though it's a cartoon. Every time I watch, even outside of a federal election campaign, which we're in at the moment in Australia, if you go and sit in Parliament, which I often do, and just listen to what's being spoken on the floor, everything seems to be about, well, this thing needs more funding. They need more funding. It's all money. Everything is like, no matter what the issue is, just throw money at it and it will fix it. And I think we've fundamentally lost what we're supposed to be doing in an economy. You can't just spray money at a problem. You can't just throw money at everything and hope that will get better. Because in the first instance, you say, well, where's the money coming from? And what really hurts me as an Australian, I hope that many people can feel the same angst that I do when it comes to these political campaigns, is that just before an election, it's like, right, we're going to spend $1 billion on this road in Queensland, and we're going to give you all a $5 discount on your tax every week, and we're going to do this, and we're going to do that. And they're spraying money around, just like you can see in this image. But where is that money coming from? The money doesn't exist. They are literally printing the money out of thin air. And for those who aren't familiar with how money works, the more money that is printed into existence, the less purchasing power that you have. And of course, that is inflation. In pure economic terms, inflation is inflation of the money supply. inflation is not inflation of prices. Prices are determined by a supply and a demand curve. Where the supply curve intersects with the demand curve, that is called price equilibrium. Now, if you shift the supply curve or the demand curve left or right, that affects the price equilibrium. It affects the price. But when we look at money supply, which is a vertical curve on an macroeconomics chart, the supply curve is vertical, and all we're doing is we're moving that supply curve further and further and further and further to the right. And when you're moving that supply curve further and further to the right of a money supply, prices are going to go up. And the reason why prices are going to go up is because you need more money to buy the same good. And then you have the audacity of these politicians and say to Australia, it's your fault because you bought a cup of coffee, you bought that house, you went on a holiday. So we're going to punish you, Australia, because inflation's too high. And we're going to punish you by putting up the interest rate on your home. And even Australians who don't own a home, they say, well, it doesn't affect me. It does affect you because you've got to rent a house. And so rents go up. All of the properties I own, all the rents have gone up astronomically without any debate. All my property managers said, oh, we're going to increase all of your property prices. And I'm like, okay, but I have to do that because I've got interest to pay on these mortgages, particularly with my negatively geared properties. I have some positively geared properties and it's just free money. And it's an example of the rich getting richer, but it doesn't make it right. So we're so focused on inflation being Australians' fault because we went shopping. But we're not focused on the fact that as soon as you increase the money supply, that is inflation, and that results in the consequence of that inflation is the consequence of prices going up. Now, what we've done in Australia, and you and I have spoken about this at length, is that we've monetized a real estate market. And a real estate market should not be a monetized market. But the main business of the banks in Australia is lending money to investors and a few first home buyers to buy houses. And houses are artificially inflated in their price here, because if we go back to the supply and demand curve, we've moved the demand curve all the way to the right. How do we move the demand curve? Well, primarily massive immigration. And I would like to say it was Australians reproducing, but we can see that without immigration, we would actually have a population decline in Australia. And we're seeing this all over the world. South Korea is probably in the worst position. Japan's not in a good position. And you can see those economies have opened up to immigration to deal with the decrease in the supply curve of actual human beings. So in Australia, we've opened up the supply curve. We've moved it to the right through mass immigration. Now, that's not an issue as long as you move the supply curve of housing to the right. But we are restricting the housing in Australia. And as a consequence, we are squeezing out all the opportunities for first home buyers to get into the housing market. And I've got a real issue with this because now people are working so hard to try and get their first home. And then when they get into the first home and they've printed too much money and controlled the supply of the housing market and they put the interest rate up, all of these Australians are being decimated. At my local supermarket, there's a lady who works there, and I see her quite regularly. And believe it or not, Martin, she's actually a bank manager. And I was getting into a conversation with her one day, and I said, "You're a bank manager?" And she said, "Yeah, my husband and I, but they've got no kids. They're a husband and wife. They've bought their first home, and the interest rate is so high." And she works for the bank that she's now got to do a 5-hour shift every night at Woolworths to deal with the increase of the interest rate. Now, it's a big rant here, but I'm going to bring it all to what you're talking about is your anchor point here. When governments put up interest rates and Australians, as in this example, have to work now 2 jobs or arguably 4 jobs in a home. So you've got the husband and wife or husband and husband or wife and wife, it doesn't matter. And they're now working 2 jobs each. You now have 2 people with 4 incomes. And when they put this interest rate up and these Australians have to work twice as hard for the same house, the house hasn't suddenly got an extra 2 bedrooms because they're paying double the mortgage payments. It suddenly hasn't gone up twice in value because it's twice as expensive to pay for the mortgage payments. In fact, when the interest rates go up, you can see some easing in the prices, not much because they're controlling that supply, but you can see that the price performance of your house, the purchase price of your house isn't going up so high because as we know, that the prices of houses are largely determined by the interest rate, not by the house itself. We can see quite clearly that when the interest rate drops, houses actually go up in value. Why? Because more people have more access to more money, therefore more competition to buy that house. Now, the prices wouldn't go up if they increase the supply of houses, but they control that supply of the houses to appease the investors, who appease the banks, who appease arguably the government when it comes to the lobbying money. So what we have now is we're in a situation where when they print too much money, which they keep doing, Australians are punished, and the world is punished because those at the top printed too much money. And they cover it all by saying it's your fault because you bought too much food and you went on that holiday. When in reality, it's because they printed too much money. And so consequently, people are now doing nothing but working as hard as they can to simply keep their head afloat, to try and get through this mess of this massive inflation. And it all circles back to, my friend, what you said here, the anchor point. What's the anchor point? Is it gold? Well, we delinked gold from money years ago. Now, I don't care if you want to call it gold, or you want to call it Bitcoin, or you want to call it the dollar. But at its core, when we think about money, a unit of supply, a medium of exchange, and a unit of account, but also a language and a store of energy, none of us can survive this if they keep printing money. So whether you want it to be the US dollar, the Australian dollar, Bitcoin, or gold, or Dogecoin, what we need to do is ensure that we can control the supply of money. Just as if we want to make houses more affordable for Australians, we have to increase the supply of houses available to Australians. But if we want to have more purchasing power for the dollar or any currency, you must control the supply of that currency. And when the money printers go burr, which they're about to, it's no secret that houses are going to go even higher. The car market's going to do better because, again, people have more access to more money. And when you have more access to more money, capital assets appreciate. But that's fine for us who have got a lot of money and a lot of houses to start with. But for the rest of society who have been left behind, they've just saved up all of this money to get into the property market. And then they dump all of this money onto the market. And you're like, yes, now I can finally buy my house. Well, no, because the interest rates have now dropped. They've just diluted everyone's purchasing power. And so that house that you've been saving for years for to get that 5 or 10% deposit has just jumped up $20,000. And so just when you're about to get into the housing market, you now need a bigger deposit to get the same house. But guess what? You're now competing with a lot of other people, including investors, including foreign investors, including politicians who are on big money, including first home buyers who are in the same boat that they have access to cheaper money, therefore can borrow more. But the supply of the housing has been suppressed. Therefore, the house prices are going to go through the roof. And what does this all mean? Ultimately, my friend, it means the rich get richer and the poor get poorer. It means that the wealth gap, the wealth divide gets bigger and bigger and bigger. And if you were lucky enough to get into the housing market and capital asset market 10, 20, 30 years ago, congratulations, you've made it. But what about everyone else? Everyone else is getting wrecked. So what we need, my friend, if you want this mess to go away, is you need a hard money. And what's a hard money? A hard money is something that's difficult to get and something that has, I would argue, a fixed supply. If we go back to Economics 101, we were taught through, I go to my university degree in economics, we were taught that the natural rate of inflation of 2 to 5% was a very good thing. And it was a very good thing in olden macroeconomic terms because it encourages you to spend your money and it allows the economy to expand naturally. Now, we can see that all fiat always fails. And what we can also see is that governments can't be trusted. Left or right, doesn't matter which side of politics you're on. People can't be trusted. Because when you have the ability to print money out of thin air, it becomes a drug. Banks are addicted to it. Governments are addicted to it. Those at the very top are addicted to it. And we need to break this addiction. We need to break the addiction to free money printed out of thin air that makes those at the very top immensely wealthy and everyone else at the bottom immensely poor. So is Trump doing a good or a bad thing? It's irrelevant. What's irrelevant is that he's doing something. Something has to be done. Now, whether you like Trump or not, it doesn't matter. This house of cards was about to collapse. Now, whether you think he's doing the right thing or the wrong thing, that doesn't matter. Why? Because we had to do something. We have to do something. It's like you've got a patient, anyone who's like a medical practitioner, and you've got a patient who comes in and, I don't know, they're bleeding out. Even if you don't have the right equipment to treat that patient who's bleeding out, you have to stop the bleeding. You have to do it with either your t-shirt, with a belt, whatever you've got, because if you don't do anything, the patient's going to bleed out. And that's what's happening now with purchasing power. The purchasing power that we all hold in this dollar that is just fake unlimited money, it's bleeding out, and someone has to do something. And the reason why there's so much pushback at the moment is because we've never experienced a billionaire politician who's actually delivering what he said he was going to do. He told everyone that he was going to use Musk. He told everyone that he was going to do tariffs. He told everyone that he was going to have the Department of Government Efficiency. And when he came in and actually started doing these things, many were flipping out. So I can't believe he's doing this. It's like, what do you mean you can't believe he's doing this? He said he was going to do this. It was never a secret. I think what we've become accustomed to, Martin, is we're not accustomed to politicians keeping their word. And we're also not accustomed to politicians taking a risk. He's taking a massive risk and he's actually keeping his word, whether we like it or not. And if he doesn't do something, we're all doomed. The good news is I'm offering everyone, the world is offering everyone 2 life rafts. The 2 life rafts are gold in physical form or Bitcoin in digital gold form. Which one do you want? I don't care. But in any case, you cannot afford to stay in fiat. It is financially irresponsible. It is a catastrophe to stay in fiat because you are losing your purchasing power. If you keep it in a bank, it can be confiscated, blocked, seized, or censored at any time. We see it over and over again. So you have to put your money somewhere. And as an investor in property myself, I'm like, well, I don't want to buy more property. Why? Because the rates keep going up. The tax keeps going up. You think, hey, fantastic, my property's just gone up $100,000. Well, guess what? That means now I've got to pay more rates. I've got to pay more insurance. I now have more expenses to maintain that house. And you say, well, I can sell it later. Well, fantastic. When I sell it, if I've been negatively gearing that property, I've now got to pay back the depreciation schedule on that property. And I've got a bigger capital gain that I have to pay more tax on. So we're actually seeing that property isn't the be all and end all when it comes to investment. So where do you put your money? Well, the bond market is a mess. We can see that the S&P 500 isn't performing as well as Bitcoin over the last 3 to 6 months. We can see that the center of gravity for the global economy has now adopted Bitcoin as a strategic reserve. So whether you want to put your money in Bitcoin or gold, it's irrelevant. What is relevant is that you cannot afford to keep it in dollars. You've muted yourself there.
Sorry, the dogs are going.
That's okay. I do it all the time.
Yeah, it's Tuesday, and Tuesday's been collection day, and when they go past, I have to mute the mic. Yeah, so 2 things to add on to that. The first is the extra bonds that are actually being issued by governments need to be serviced, and the interest rates at which they are being issued are much higher, which means that we have a greater proportion of taxpayer money going back into servicing that debt, right? So one of the reasons why the balance sheets of many countries around the world are in difficulty is because more and more money from taxpayers is going to support that higher cost of debt, which is being issued at the moment. So one of the things that Trump might succeed in doing, if he gets the interest rates down, is to reduce the cost of that ongoing debt. So that's part of the puzzle. The other point, which I think really, really important, and going back to that cartoon of squirting money around the place, was this particular post from Ben Phillips, who made the point that the election housing policies for first home buyers mostly will benefit the middle and high income households, with little benefit for struggling low income renters. And so the point that I want to re-emphasize is how unequal a lot of the policies that were issued through the election process are, and how a lot of people are actually not being helped at all by any of the things that are going on at the moment. So we spoke about the cost of living going up, the inflationary impacts of that. Real incomes have not been growing, of course, relative to costs for a long, long time. And, I come back to Morgan Cox. You may have seen I've referred to him a few times because Morgan was on the ABC a few weeks ago on Q&A and asked a specific question of the panel about high rental costs and migration. And I have to tell you that the answer that the ABC panel gave was pretty bad, but he's doubled down and he's now camping outside Albo's investment property and basically says, look, everyone deserves a home, Albo. costoflivingcasualties.com.au, tell your story. Interestingly, the police actually came round and said to him, no, you need to lose the name. So he's had to paint over elbow, right? But the point is that here is iconically the problem, right? A lot of people are actually not able to find anywhere to live. They're not able to find anywhere to rent. They're living in tents, they're living in cars, they're living wherever they can. And something fundamental has gone wrong with the Australian society and economy when a third of people are struggling with housing. It can't be right. So going back to your point about the haves and the have-nots, it seems to me that a lot of the policies over the last few years have concentrated wealth in a proportion of society and has actually increased the gradient so that more people are falling off the back of the lorry, as it were. And that takes you into a very important observation about the societal impacts of these bad policies over the last 20, 30, 40 years. It's not just happened in the last 3 years. This is actually a consequence of bad policy over a long, long period. And it's all driven around this concept of what central banks are trying to do and the fact that governments can issue more debt and we can just make the fiat go up and up and up and up and up and up. So those are the root causes. So my point is it's the monetary system that's creating the inflationary problem. It's the monetary system that's creating the homelessness and the other stuff we're talking about. It's designed to do this, which is why we have to find a different way.
It's interesting. My grandfather was a blue-collar worker. He had 7 children and a wife. So he was supporting 9 people. And he could do that. He could buy a house. He could support 9 people, and survive and go on a holiday. The thought of any average Australian blue-collar worker or even white-collar worker, it doesn't discriminate now, having 7 children and a stay-at-home partner, it's fiscally impossible. Now, let's unpack this. The technology compared to the production technology, the production capacity of when my grandfather was in his 20s and 30s compared to where we are now is completely different. Production lines are more efficient. Technology is better. We have better production of food and energy. Everything has improved. Yet why are we poorer? And it's so simple. It's because the monetary policy is broken. Now, you've spoken about the policy around money. I actually just push it a step further. And I say, yeah, absolutely. The policy is, I would argue, corrupt. It ensures that those at the top get a lot more than those at the bottom. It ensures that the wealth gap gets bigger and bigger and bigger. It ensures that those at the very top get the most value out of the printed money. They get to take the most purchasing power. And by the time it trickles down to us mere mortals, they get wrecked. But I take it a step further, Martin. The base issue of all of this is the money itself. The problem is the money. The policy absolutely amplifies the issue with money. But if you have an unlimited money linked to nothing, printed without limit, it's going to fail. Not because I say it's going to fail, but it's because it's the laws of the markets. It's the laws of reality. All fiat always fails. Money must be scarce. Money must be hard. Money must be neutral. Money must be open. And money must be borderless and censorship resistant. The money we use now is none of that. It is neither borderless, nor neutral, nor hard, nor open, nor censorship resistant. But above all, it's not scarce. They keep printing more and more of it. And that's why things get more and more expensive. So this is where it all comes around to the very first step of all of it. Where does the money come from? And all of Australians, all of the world has to say, right, do you want a money that can be printed without limit, not to be put in your bank account, but to be put in other people's bank accounts, as in the 0.1 percenters, at the cost of your savings? When they print more money, it robs everyone else's purchasing power. So we are taxed to an oblivion in Australia. Our tax brackets are high. We've got goods and services tax. We've got this fuel excise tax. We've got land tax, luxury car tax, payroll employee tax. The taxes are just unlimited. But then when you go to purchase stuff, as I mentioned, you've got a goods and services tax. So you've got a tax when you earn money. You've got a tax when you own a capital asset like property. You've got a tax when you spend the money. But there's a tax that no one talks about, the invisible and brutal tax of inflation. A huge facade where, again, they blame you for inflation because you bought a loaf of bread. And we're taught at school that there's, I don't know, 100 genders and white man bad. But they don't say, well, this is what money is, this is where it comes from, and this is why you're getting poorer. What they do say is that, in fact, well, it's your fault for inflation. And we're going to fix the problem by spraying more money at the problem. And we're also going to fix the problem by punishing you by putting the interest rate up so you can put more money to the bank. And it makes you think that when they put the interest rate up, I've mentioned this many times on my channel. So they put the interest rate up, and you're paying, as an example, you're paying $2,000 a month in your mortgage, and now you're paying $3,000 a month in your mortgage. Where does that extra $1,000 go? If they were really trying to curb inflation and they said, right, we're putting the interest rate up, all of you Australian battlers out there, you're now going to pay 50% more on your mortgage. But to ensure that inflation's under control and to ensure that you've got more purchasing power, we're going to take these extra payments that you're paying for the same house in the same suburb with the same bedrooms, the same paint, everything's the same, but you're now paying 50% more or 100% more. We're going to take all of this money, physically or literally, we're going to go into a big field, we're going to pour petrol over it, and we're going to get the treasurer to come and light a match and throw it onto the pile of money. Woof. You say, well, why would you do that? Well, that would decrease inflation because you've decreased the money supply, therefore increase the purchasing power. But of course, that's absurd. No one would ever do that. So where does the money go? When we take the money out of the economy, so we have to slow the economy by taking money out of the economy, therefore reducing the supply of money in the economy, therefore increasing the purchasing power. It doesn't happen. It doesn't happen because they don't burn that money, either digitally or physically. All that happens is the money goes to the top. So the purchasing power that you've got has still been depleted because they printed too much money. And when they confiscated the money off you through higher interest rates, that didn't decrease the total money supply. It may have temporarily decreased the circulating supply, but not the total supply. What does it all mean? It doesn't matter what they do with interest rates, Martin. Unless they're burning that money when they take the money out of your pocket, your purchasing power is still wrecked, absolutely wrecked. So what's the antithesis to an unlimited money that governments get to print? Now, again, the semantics, governments say, we don't print it, the central bank prints it. Yeah, governments write the IOUs. For those of you out there who are saying, what's this bond thing we're talking about? The easiest way I can explain bonds to everyone is an IOU. The government says, right, hey, central body, and we'll go to America now. Hey, Federal Reserve, you're neither a federal entity nor have reserves of anything, but we need $100 billion. Can you give us $100 billion? And they say, sure, we want an IOU. And the government says, sure, here's an IOU for $100 billion. There you go, Federal Reserve. And the Federal Reserve goes, huh, thanks. They print money out of thin air, either physically or digitally, primarily digitally. So we're already using a digital money. And they give it to the government. And then the government spends it. And then they've got to pay it back, the principal and interest. And this is why the debt can never be paid back. It can never be paid back because if you borrow, we'll make the numbers simple. If you borrow $1 trillion from the Federal Reserve or central bank, and the bank goes, all right, the government says, right, we need $1 trillion. Here's an IOU or a bond. And the Federal Reserve goes, all right, well, here's $1 trillion. Imagine that government just said, all right, we've done nothing with the money. We're going to pay back that debt. Here's $1 trillion. We pay back the $1 trillion, right? Everything's settled. That would cancel out the debt. But it can't cancel out the debt because we're forgetting the main thing, interest. Let's say we'll keep the numbers simple at 10%. So the government borrows $1 trillion, and now they've got to pay back $1.1 trillion. Well, if all money is created into existence through debt, which it is, it's not created through plowing the fields. It's not created through mining gold. Fiat is created into existence through debt. It's created into existence through either bonds or fractional reserve lending, but in any case, it's through debt. So if you want to pay back a debt on money that never existed with interest on top of it, where are you going to get the interest from? Because in this example, they printed $1 trillion, but now they want $1.1 trillion back. But they've only printed $1 trillion into existence. So where does the $0.1 trillion come from? I know, we'll print more fake money, which is why the debt can never, ever, ever be paid back. Because the only way to pay back the interest on the debt is by printing more money. And this is why it's called a Ponzi scheme, because everyone has to keep buying into it. And the audacity the fiscal incompetence, the economic illiteracy to say that Bitcoin is the Ponzi scheme, absolute lies. Bitcoin has a set supply. It's 21 million. No one can print anymore. The price is determined by the market. It's not determined through fiscal policy. It's not determined by a Federal Reserve. It's not determined by me talking about it. It's not determined by anything but the free market, the essence of democracy, the free market. So whether we like Bitcoin or not, we have to ask ourselves, how are we going to get out of this mess? Do we keep kicking the can down the road? We've run out of road. There is no more road to build. Okay, we'll build more road by getting more debt. We can't get any more debt. We're decimating the economy. So we have to do something. Now, whether it's gold or Bitcoin, we're going around in circles here, it has to be something. But it can't be the dollar because all fiat always fails, and we're about to see the collapse of the next empire. We had, not in any particular order, the Greek Empire, the Spanish Empire, the French Empire, the Portuguese Empire, the Dutch Empire, the British Empire, arguably now we're in the US Empire. There's always a change of the guard. And it doesn't matter how many aircraft carriers you've got. It doesn't matter what colors on your flags. All fiat always fails. You can't fight your way out of this. So we need to all come together and say, well, what's the antithesis? But the step one to, in fact, all of it is understanding money. Until we understand money, we have no hope. So isn't it ironic, Martin, that they're so focused on putting all of us against each other in the mainstream? And this isn't a conspiracy theory. We can see it. Men against women, black against white, native born against immigrants, gay against straight, LGBTQIA+. I'm not saying any of these groups are bad. I'm just saying it's constant division that is putting us against ourselves. When in the background, the puppet masters at the top are just laughing. It's like, right, look at all these kids at the bottom fighting over color and gender and religion and immigration and take your pick. When what they should really be fighting over is, hey, whoever's at the top, we are robbing you blind. We are stealing all of your purchasing power. We are stealing all of your savings, and you have no idea it's happening because you are financially illiterate. And you are financially illiterate not because you are stupid, but because we never teach you about it at school. We teach you about many other things at school, but we will not tell you what money is. We won't tell you what fiat is. We won't tell you what bonds are. We won't tell you about any of that stuff. And even when you go to university and get a degree in this stuff, as I did, I didn't truly understand it until I got into a truly hard money. And that truly hard money is Bitcoin. I am open to any alternative. But until we have an alternative that anyone can present, I do not accept the argument, well, I don't know what the alternative is, but it's not Bitcoin. I can give you 16 years of data. I can give you the most secure network in the history of humanity. I can give you the best performing asset in the history of humanity in any market. I can show you that Bitcoin has the biggest market cap, number 8 in the world at time of recording. It's the 8th biggest market cap of anything in the world. It's bigger than any bank. It's bigger than any oil company. It's bigger than any retail outlet. And it doesn't even have a CEO. It has no board of directors. It has no inflationary control measures when it comes to artificial levers being pulled on it. It has no laws on it saying that you must use this money. It has no military backing it. It is purely open in the market. And it's the 8th biggest market cap in the world, bigger than any bank. How much more proof do you need, my friend?
Yeah, well, I'm of the view that what we have currently is not fit for purpose for all the reasons that we've been discussing. Interesting. James makes an interesting point. Well, a point which I'll see whether it's interesting or not, depending on what you think. Infinite divisibility of Bitcoin is crypto inflation. What's your take on the fact that you can continue to slice Bitcoin into smaller and smaller and smaller and smaller pieces, which, although are incremental elements within the overall 21 pantheon?
Great question, and I can easily answer it. James, thank you for your comment. It's factually false, and I'll give you an example. So this is a 1 ounce coin that I have in my hand. This is 1 ounce, valued at about $30. If I break this into 2 pieces right now, have I just doubled the supply of silver that I have in my hand? Have I taken this ounce of silver and turned it into 2 ounces of silver? Have I created inflation of this piece of silver if I cut it into 2? Of course not. It's still 1 ounce of silver. It's just now in two pieces. If I cut it into four pieces, have I increased the supply of silver in my hand? Of course not. Now, physical gold and physical silver is in fact infinitely divisible as well. But what we all have to ask ourselves is if I take this ounce of silver and break it into 100 million parts, which is what a Bitcoin could be broken into, 100 million parts. And even that's called a Satoshi. So there's 100 cents in a dollar. If I break a dollar into 100 parts and have 100 cents, I haven't increased the money supply. I've just broken it into smaller parts. It's still a dollar. If I take a Bitcoin and break it into 100 million pieces, which is called, each piece is called a Satoshi, I haven't increased the supply of Bitcoin. It's just been divided into many pieces. If I were to try to do this with gold, and I want to break it into 100 million parts, whether it's this piece of silver or this piece of gold, and I break it into 100 million parts, how do I manage a piece of physical gold that's the size of an atom? Like, really, how do you physically do it? And this is where we talk about Bitcoin being a better gold in this instance. It's a better gold because it is infinitely divisible. Now, divisibility is not inflation. Divisibility is taking the same supply and breaking it up into small pieces so everyone can access it. Inflation is where you take this piece of silver and magically increase it to two pieces of silver, then three pieces and four pieces. That is inflation. And if you really want to go to gold versus Bitcoin, we don't know the supply of gold. We know there's about 4 Olympic-sized swimming pools that we've pulled out of the ground. We know that Indian women collectively are the biggest holders of gold in the world. We don't really know how much gold is in Fort Knox. We don't even know what it's valued at. So for any money, we actually need to know what the supply is. Imagine being able to determine fiscal policy when you understand what the supply is and where that money is. Well, you can do that with Bitcoin at any time. I can tell you right now exactly how many Bitcoins in circulation. I can tell you what wallets it's in, and I can do it all through my phone. I don't need to ring up the treasury. I don't need to be a government department. I don't need to be the police or the FBI. Everyone has access to it. You can have access to this. So no, divisibility is not inflation. They are two completely different concepts. And just because I break one piece of something into two pieces, I have not increased the supply. I've just increased the quantity, but the supply remains, the total supply remains the same.
Right. Thank you for that one. And some people following that in the chat and thinking, yeah, get it. That's good. Here's another question. Of course, we've got Bitcoin and we've got some other cryptocurrencies. XRP, of course, is one that's very much in the news at the moment. Take us through what's happened with XRP, because I think this is an interesting case study in what can go wrong.
Okay, so allow me to pre-warn the audience of my biases and my investments. I hold XRP. I've been buying XRP since 2017. I have a huge position in XRP, but I have a much bigger position in Bitcoin. I don't like XRP for a couple of reasons. And you say, well, hang on a second, why would you buy something that you don't like? It's because as an investor, I do not let my ego get in the way of profits. And as an investor, I do not discriminate against profits. However, XRP is very different to Bitcoin. Now, again, there's going to be a lot of argument from the XRP army compared to what I'm saying here. The XRP army is a very loyal following to XRP and a very sometimes aggressive response to anyone who dares question the validity of XRP. The truth is the best performing asset in the world, not just in the crypto, but in any world ever, is Bitcoin. Millions of % return. Bitcoin has no CEO. It has no board of directors. It is simply an algorithm operating on the SHA-256 algorithm. Millions of nodes globally, millions of miners globally, an open network, an open ledger that everyone can access. XRP was designed by a company called Ripple, and it was designed to facilitate better cross-border payments in the existing financial sector. I would argue primarily to replace the SWIFT network. If you think of the SWIFT network at the moment, Martin, you're in England, I'm in Australia. If I want to send you money, I would have to go through a central body. It would take 3 to 5 business days. I'd have to deal with the exchange rate. I'd have to deal with the fees. So XRP said, well, hang on a second. Well, Ripple, the company who created XRP, said, well, surely there's a better way that we can transfer value around the world other than using the SWIFT network. And they have absolutely come up with a better way. They've come up with a token called XRP. Now, XRP has a supply of, is it 1 billion or 100 billion Papa Bear, can you put it in the comments so I can see you there? But what we can see with XRP is that when it comes to price performance, the price performance of XRP has not been very impressive. XRP's all-time high was around $3.80 in 2017. In the 2017 cycle, XRP hit its all-time high of about $3.80 US dollars. It has never come close to that all-time high, particularly when we adjust for inflation. And I'm not just throwing dirt at XRP when I throw in the inflation figure. The amount of inflation that we've had from 2017 to 2025 is very significant. So adjusted for inflation, we really need XRP to go to $5 to meet its all-time high of the past. Now, the argument is by the XRP army, and who am I to speak on the XRP army's behalf? But ultimately, the XRP army, there's two schools of thought when it comes to this. XRP is a better Bitcoin. XRP will have a better performance than Bitcoin. XRP will overtake Bitcoin by market cap, and XRP will be more accepted by the banks and the fiscal system globally because it's ISO 20022 compliant. Now, what's not true about that statement is that, now, I've got to be careful what I say here. What's not true in that statement is some believe that XRP is the only compliant coin with the ISO 20022 standard. That is factually false. There are multiple cryptocurrencies in the world that are ISO 20022 compliant, multiple coins. They include, beyond XRP, from the top of my head, you've got Cardano, you've got HBAR, you've got, I believe, Solana. Shouldn't be doing this off the top of my head. You've got Avalanche. There are many coins. There are about 30 coins that are ISO compliant. What we've also discovered, what I'm actually discovering, is that XRP was created before stable coins came in. So where there's big conflict between the crypto goers out here in crypto land, the big conflict is this. The conflict is Bitcoin maxis, Bitcoin purists say that Bitcoin was designed to break away from the centralized fiscal system that we're all dealing with now. Bitcoin is the antithesis to banks, and Bitcoin is the antithesis to fiat. It's the antithesis to fiat because it has a set supply, and it's the antithesis to banks because you don't need permission to use it. It's permissionless, where banks are, you need permission. You need the right paperwork, you need to be able to go into the shop. In some countries, you need the right shoes just to get into the bank. You need everything to get permission to use these fiscal systems. So part one of the epic battle between Bitcoin and XRP is that Bitcoin is the antithesis to banks and fiat, whereas XRP is designed to facilitate bank payments. And many XRP army gets very upset by this, but it's a matter of fact. You go to Ripple's website itself, it brags about all the deals it's doing with the banks. It brags about being ISO 20022 compliant, so it complies with the banking sector. It brags about getting more cross-border payment remittance programs like Western Union isn't on board yet, but MoneyGram is. And they say, well, look, we've done all these deals with the banks. So that's okay. There's no problem with it. XRP is absolutely to facilitate the banks and to facilitate the payment systems that we have at the moment. That's not to say that XRP can't be used peer-to-peer. I could send you XRP right now without using a bank, but I could also send you Pepe right now without using a bank. I could send you Dogecoin without using a bank. So the argument that XRP is about peer-to-peer is not true, because it's primarily, and this is coming from Ripple itself, it's primarily about facilitating payments for the banking sector. It's about facilitating payments for the banking sector using the XRP ledger, using the XRP token, and making it cheaper, faster, and easier to evolve from where we are now with the SWIFT network to using XRP. But here's the thing. When I deep dived into this coin many years ago, we all have to ask ourselves, do we want banks in the future? And will we have banks in the future? Now, two schools of thought here. One school of thought is banks are so big, they will always be in the system. We cannot fight the banks, so if we can't beat them, we might as well join them. The other school of thought when it comes to the banks is like, no, everything always evolves. Banks are evil. And if I have a choice to not be with the banks, I will break up with the banks. The Bitcoin maxis have nothing to do with the banks. And we can see in Australia and around the world, many banks are kicking out crypto enthusiasts and saying, right, you're using our competitor here. We want you out of this fiscal system. We're closing your accounts. There's no right of reply. Get out of our banking system because you're using Bitcoin. And I had a guest on last night where he arrived in Thailand on a holiday. And just as he landed, his bank rang him up and said, no, you're out of our financial system. So we need to ask ourselves, step one, Will we use banks in the future? I'm not going to give you the answer here. Some say banks will always be in the system. Some say no, they're too big and will always be. They'll always be in the system, or no, we won't use them. You make a decision on that. The part two to this question, Martin, is will banks use XRP or will banks use their own coin? Now, this is where a lot of emotion is driven up in the crypto land, a lot of emotion to the point of death threats. The XRP army says, no, our product is superior. We have the best speed, the best technology, the lowest transaction fees, the biggest liquidity pools. We are the superior product on planet Earth. There is no way banks would ever use their own technology, and there's no ways the banks would ever use anyone else's technology because we are the best, we are ISO compliant, and the banks need us. But that was a narrative in 2017. 8 years ahead, which is basically 80 human years because things are moving so quickly in crypto, is that we've had this thing created that's called a stable coin. And a stable coin is pegged to the value of the US dollar. And we've had legislation passed in the United States where banks are now, they have the permission to print their own stable coin. And so consequently, we have to say, well, if we think banks are going to exist in the future, are they going to use your technology, Ripple, or are they going to use their own technology, as in their own stablecoin? Now, the SWIFT network itself is working with HBAR, an incredible coin that is ISO compliant and has incredible technology behind it. And the SWIFT network itself isn't working with XRP, which is fine because XRP is arguably, in my opinion, and many others, competing with the SWIFT network, which makes perfect sense. But the SWIFT network isn't using XRP. The SWIFT network is using HBAR to develop its technology. Will there be the SWIFT network in the future? I don't know. When it comes to the banks themselves, absolutely, I think 8 years ago, the narrative of banks using a more efficient system such as XRP makes perfect sense. But since that time, we've had the birth of a thing called stablecoins. And the biggest stablecoin at the moment is Tether. The second biggest stablecoin is USDC. And the volumes of movement of money around the world is being done in crypto. It's not being done through XRP. It's being done through stablecoins. And now that banks have legal permission to print their own stablecoins, and XRP itself, which has its own stablecoin, has printed more of its own stablecoin, not on Ripple, but on Ethereum, we can see that the fact that maybe the narrative has changed. Maybe, well, we know as a matter of fact, XRP is not the only coin that is ISO 20022 compliant. There are multiple coins that have that compliance. We can see that stablecoins are dominating the market for moving money from point A to point B. We can see that Bitcoin's dominance is at 62.26%. But even if that doesn't appease the XRP army, and keep in mind, I hold this coin because if I'm wrong, I'm rich. But if I'm right, I'm still rich, but I don't get the returns from XRP. But the truth is in the markets. And the truth is this. Bitcoin at time of recording is at $88,513. It's up and to the right. XRP at time of recording is $2.10. Nowhere near its all-time high, particularly when we account for the inflation. It's not even half of its all-time high. So the truth isn't in what I say. The truth is in the markets. And if the markets want to use XRP, they will use it. And this technology has been around for nearly 10 years. And XRP isn't getting bigger. Stable coins are getting bigger. And if you were a bank, would you, and you had the choice, hey, bank, you can print your own stable coin and generate your own fees and have your own network. Or bank, do you want to use someone else's technology and use their network and their fees? And evidently, the market is speaking the truth. Stable coins are getting bigger and bigger and bigger and bigger and bigger, whilst XRP has flatlined. Maybe it'll pick up. But for the last 7 years, the narrative has been the same. XRP is better than Bitcoin. XRP is going to flip Bitcoin. Everyone's going to use XRP. XRP is the main thing. And it's doing fiscally in its price performance, it's doing nothing. Oh no, we just need to do more deals with the banks. You've done more deals with the banks. Oh no, we just need to beat the SEC. You beat the SEC. Oh, you just need to see what will happen. I'm waiting to see what will happen. If XRP goes to, look, the extreme end, as they say, if you look at TikTok fiscal advice, XRP is going to $10,000 a coin. If XRP was $10,000 a coin, that's about 4 times the size of, as a market cap, about 4 times the size of the entire global GDP. I don't believe any coin is going to be 4 times the size of the entire global GDP. But if it goes to a more conservative estimate of $589, then its market cap would be, I think it's about 100 times that of gold. Now, it's not impossible, but it's probably not probable. What is happening is that Bitcoin's dominance is now at 62.27%. So that means of the nearly $3 trillion in all of crypto, 62% is in Bitcoin by itself. Bitcoin just keeps getting bigger and bigger and bigger. And XRP itself, with its own stablecoin, which never existed when it first created, has printed more of its stablecoin on Ethereum than on its own ledger. Will XRP succeed? Depends who you ask. You've muted yourself again.
I knew we were going to enter the shark-infested waters when we touched on this one, but it's good to have this conversation.
Jason, chat melting.
Yeah. Jason asked this question: when ISO 2022 comes in and Bitcoin isn't compliant, how do you buy a house given Bitcoin doesn't comply with 2022? Bitcoin transactions will be blocked at a lower layer, as currently happens with BTC.
Jason, you always raise great questions. The fact is, I can already buy a house with Bitcoin. To answer your question, I don't need to be ISO compliant to buy a house. And if you demand that I become ISO compliant, I simply sell the Bitcoin for fiat or a stable coin. So to answer your question, if you pay me as an example, and you say, I say, you pay me in Bitcoin. And the reason why you pay me in Bitcoin is because all the fiscal non-financial advice I've given over the years, but the crypto guidance I've given, I charge between, I don't know if I can say this, why not? I charge $500 an hour, but you pay me in Bitcoin. And that $500 an hour in the past that you paid me in Bitcoin is now worth $1,500 an hour. So I'm an example of, because I demand to be paid in Bitcoin or we don't do business, everything that you pay me today just keeps going up and up in value. So I'm basically tripling, quadrupling, quintupling my income by simply being asked to be paid in Bitcoin. There's no police that kick down my door and say, you accepted money that's not ISO compliant, we're arresting you. I absolutely pay my taxes. But this belief that I can't accept money because it's not ISO compliant is factually false. I'm living proof of it. You can pay me in Bitcoin. In fact, you must pay me in Bitcoin or we don't do business. There are exceptions, of course. But to counter the argument, if there is a magic police that come in and say, no, you can't accept money that's not ISO compliant, fine. I'll take my Bitcoin that I bought at $500, that's now $100,000, and I'll sell it into a stable coin, or I'll sell it into pick your coin. So I buy Bitcoin and I earn Bitcoin and I mine Bitcoin and I hold Bitcoin, and its purchasing power goes up, 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 up and to the right. When it comes time to do a transaction, for example, buying a house, if the vendor wants Bitcoin, I'll just pay him a Bitcoin. But if they say, no, I'm scared of the ISO 20022 compliant police, you've got to pay me in dollars, I'll say, all right, no problem. I sell the Bitcoin for dollars. There's the dollars. Give me my house.
And
you muted yourself again. Oh, yeah.
No. I was just laughing quietly. Cookie Boy said, if the US dollar is collapsing, doesn't that mean crypto will be worth less? And that's, I guess, because we're actually comparing it with dollars.
No, it's the opposite. A great question, Cookie Boy. Not sure if you're related to Cookie Monster. It's the opposite. It's a seesaw effect. So when it's about to happen. So when they print more dollars, the purchasing power of dollars goes down. So the purchasing power of Bitcoin goes up, and it's a seesaw. And that's what we keep seeing. That some would argue, we'll go with gold. If you don't like Bitcoin, we'll go with gold. Has gold hit an all-time high, or has the US dollar hit an all-time low? Like, really think about it. Is gold suddenly buying you a lot more than it did in the past? Of course not. Its purchasing power has remained consistent. And you say, well, hang on a second, Adam. 10 years ago, I could get gold for $2,000. Great. 10 years ago, everything was much cheaper. So that $2,000 could buy you the same as what that $3,500 can buy you now. So the purchasing power of gold just maintains its consistency. But and this is why we say Bitcoin's got an infinite top. It's a really good question there from Cookie Boy. The further the dollar falls, the higher Bitcoin goes. Bitcoin has people say, oh, there's no way that Bitcoin could go to $1,000 and then it went to 1,000. Well, it's not going to 10,000, then it went to 10,000. Oh, there's no way it's going to 100,000, and then it went to 100,000. And I'm telling you right now, it's going to $1 million. And after it gets to $1 million, everyone's going to say, well, it's not going to $10 million, and then it's going to go to $10 million, and then $100 million, and then $200 million. Why? For that very reason, they keep printing money. So the purchasing power of your dollar keeps going down, whilst the purchasing power of Bitcoin goes up. Why? Because its scarcity, it becomes more scarce in the sense that you have more people trying to buy a set supply of a very scarce asset. Equally, when people lose Bitcoin, you can't just print more Bitcoin. There's only 21 million. That's it. So ultimately, the further the US dollar falls, or any dollar, the higher Bitcoin goes. Because what it's compared to, the anchor point you're talking about, that anchor point being the dollar is now worth so little because they printed so much that just as like you need more dollars to buy the chocolate bar, it's the same chocolate bar, but you need more dollars to buy the same chocolate bar. The same is going to happen with Bitcoin. Not going to happen. It is happening right now. Bitcoin's pumping as I'm speaking to you right now. Bitcoin's at $88,585, up 2.16% for the day. It's up and to the right. Why? Because the demand on Bitcoin is increasing, whilst the demand on the dollar is decreasing. Equally, the supply of Bitcoin is set, whilst the supply on the dollar keeps increasing.
Yeah, very interesting. And thank you for that explanation. The chat is going red hot as normal when you come on, which I love. But it means it's sometimes a little difficult to follow all of the threads because, of course, they're all sort of interwoven with each other. But we're sort of starting up towards the end of the show. And I just wanted to cover one other angle on this, Adam, and that is you interviewed a couple of independents, Andy and also Rennick. And I wouldn't mind getting your take on what you heard. And the question I got, I suppose, is, in this election, the independents seem to me to be a pretty important element within the landscape. And it's interesting to try and get a take on, how to think about it. The truth is, of course, and, I've shown this a few times, but it's quite funny, right? If you're voting for the big parties, you're both voting effectively for the same two sides of the same, what. But the question, I guess, is what's your take on your conversations with some of those smaller parties? I've had a conversation with them. I think they make some really, really powerful points, but I wonder whether it's going to move the dial.
Look, what we can see is, so I started off my my YouTube journey as a crypto commentator. I started off in mining and talking about mining. Then I started talking about warning people for scams. Then I started getting into the macro, and then I started getting into politics. And many people warned me not to speak about politics because it hurts people's feelings and it's very divisive. But the truth is, you cannot separate money and politics. It's impossible. It is impossible if you are legitimately focused on truth and determining a solution to the mess that we're in. You cannot separate money and politics. My biggest concern, and that's why my channel sort of migrated into politics to the extent that's like, well, we've got all this fiscal nightmare around us. I don't get to determine fiscal policy. I don't get to print the money supply. I don't get to determine the interest rate. So politics is naturally going to come into a channel that talks about the economy and a hard sound, immutable, open, borderless censorship money. My biggest concern, Martin, and I'm very grateful that even though you're over in Mother England, I'm very grateful that you still focus on Australian politics and the Australian economy. And I can see that you have a deep loyalty to this country. And I'm very grateful and humbled by that. My biggest concern is that Australia is being sold a lie we are presented this facade that you only have two choices, Labor or Liberal. And we can see this on national television where we had a debate recently. And on the stage, we had the two leaders from the left and the right, or the Liberal Party and the Labor Party. And it's like, well, where's everyone else? And so it's another thing that we're not taught about properly at school. We're not taught about money, and we're not really taught about politics. And so we see these two men on the stage and we say, well, we must be like America. It must be either Trump or Biden or Dutton or Albo. But that's not the case in Australia. Now, to all my Australian brothers and sisters out there, I'm not telling you who to vote for. That's your choice. I believe deeply in democracy, which is why I believe deeply in Bitcoin, because it's neutral. It's not controlled by a political party. It's not manipulated by a human, left or right, male or female, gay or straight. It's completely blind. It's completely neutral. A hard, open, borderless, censorship-resistant money has to be blind. And the only thing we've got at the moment is Bitcoin. But I'll bring it back to politics. To answer your question, my observation is that Australia's pissed off. We are angry, we are tired, and we are broke. But here's the thing, we don't actually understand why. And I can see in the comments, I've been doing this for nearly a decade now. I can see, not even when I'm on YouTube, but when I talk to other people, I can actually see the anger against Bitcoin. And it's quite fascinating to me. And it's like, you're so furious at what's going to save you. You're so furious at the antithesis to what's breaking your life. I'm not trying to sell you anything. I'm not telling you who to vote for, but something is wrong in our lives and we can all feel it. Something doesn't feel right. We can feel that we're getting poorer. We're working harder. The media is becoming more centralized. We were nearly silenced through the MAD bill. They wanted to take our cash away through the cash ban. And everyone's frustrated. Then we're being divided, as I said before, when they divide us through men versus women, black versus white, gay versus straight, Australian born versus non-Australian born, Indigenous versus non-Indigenous, and it's this constant divide. And then when something like Bitcoin comes up, it's like, oh, you're a scammer. It's like, I'm almost elevated above it. I've seen it before. But when it comes to politics, what we can see at the moment is that people are desperate to break away from this broken system. But they don't understand how. And the first layer to this is that they don't understand that we in fact have more choices than Labor or Liberal. Now, if you want to vote for Labor or Liberal, go for it. But what I'm deeply concerned about is that when you only have two parties presented on the global stage or on the Australian stage for the great debate, I mean, what an absolute scam. Where were all the independents? Where were all the other minor parties? But what we've actually seen, as I interviewed Senator Rennick, he said something very powerful that I think about. He actually said the independents and the smaller parties, they need to become more polished and they need to become more refined. Now, like them or hate them, Labor or Liberal, they are compared to some of the other parties and the individuals, as in the independents, they're definitely more polished and they're more refined. And why is that? Well, it's because they've been playing the game for a century in this power position. Two cheeks to the same bump, two wings to the same bird. And they know how to play the game. They're the opposition or they're in power. And that's all we've really known. And in Australia, I think we are a victim of the tall poppy syndrome. When I lived in America, I was actually surprised how much they celebrate politicians and how much they celebrate success. Whereas in Australia, we're actually taught the opposite. Don't be the tall poppy or we'll cut you down. Don't speak out, otherwise you'll be punished. And consequently, those who actually speak out as an independent or a minor party, perhaps not all, but perhaps generally speaking, they're not the most refined or the polished individuals to come forward and put forward the debate. Perhaps the most polished and refined individuals who could stand up to it, they've already got their job. They've already got their family. They don't want to ruffle any feathers. Part of their culture is just to lay low, go to work, pay your taxes, support your family, have your annual holiday, and get on with it. To actually rise up and stand up against this centralized corruption, left or right, this broken system, this money printing, this lobbying, it's going to come with consequence. And Rennick has said in previous interviews, he's basically said that it's a very toxic environment to be in politics. And if you are polished and refined and earning good money and you just want to get on with your life, do you really want to enter a toxic workplace? Do you really want to enter a place where there's constantly cameras in your face, picking bits from your past from 40 years, 50, 60 years ago? Facing false allegations of sexual or professional misconduct, that just the allegation is put out through an anonymous source. And now you have to defend yourself on the national stage for an allegation where you're not allowed to know exactly what the allegation was or who made the allegation, but you're now in the position to actually respond and defend yourself. So consequently, I would suggest, and what I can see from these independents, is that the greatest people in this nation are in fact not stepping forward to lead it. The greatest people in this nation are doing one of two things. They're either laying low and remaining in Australia and just getting on with looking after their family or business, or two, they're fleeing. And you can see that with the brain drain in this country. That people are going to where they're treated best. They are taking their money and their resources and their opportunities, and they are leaving this country. They are leaving the country because the taxes are too high, the system is too broken, and they can be treated better somewhere else. And as a result, I would argue, in my perception, noting I've only been in this country for decades, is that we actually don't have the best people at the front leading. And if we do have the best people in the front leading, if Albanese and Dutton are the best men or women in all of this country who are leading this country, where are their competitors? There are some exceptional people in this country, absolutely exceptional people in this country, but they are not challenging the leadership. They are laying low because they are tired and they are broken and they just want to get on with life. And consequently, those who are challenging the system may not be coming forward as the most refined or polished individuals. And therefore, the masses go, oh, well, I'll just stick with the major parties. What we really need, in my opinion, is we need to break away from the lobbyist having the power. The leader in this country cannot lead this country. Why? Because if they've got to appease the party, and if they don't appease the party, they'll be thrown out by their own party. We saw this with the revolving door of prime ministers, where we'd wake up every morning and there'll be a different prime minister. I didn't vote for them, and suddenly they're just sacked. They're trying to appease the media, which is controlled by whoever's got the most money. They're trying to appease the voters, which are those who are probably in front of the TV or sitting behind the TV watching whatever the mainstream media puts in front of them. But they're also trying to appease the lobbyists. So I actually say perhaps America got this part better. Perhaps America got it better, where they in fact have a republic and you're voting for the individual who's representing the party. And once they're in power, they can actually lead for a few years without the threat of being thrown out by their own party, without the threat of being thrown out by the lobbyist. They're still going to deal with the media pressure and the centralized sponsored media. But at the moment, I would suggest, just as we need great reform in this country for money, we equally need great reform for politics. And the way we need to do that is we need to revisit the Constitution. If I were in charge, the very first thing I would do is to say, this country needs a Bill of Rights. Because if the individual doesn't have rights, how can we progress? We nearly lost the rights with the cash ban, which is what brought us together. And then we nearly lost the right to speak when the government said, right, we determined that only these four groups of people can speak: the centralized media, the centralized government, the centralized banks, and the centralized universities. They can all speak, whatever the narrative is, but anyone else, you speak, there's going to be consequences. And thank God we stopped that bill. Thank God the people of Australia said, no, we will not be silenced. We will not be threatened by fines or being put in a cage, as we can see what's happening in the United Kingdom at the moment. Absolutely terrifying, where people can go to jail for posting a meme. Terrifying. If we can't speak, if we can't think, it allows those at the top to become corrupt or corrupted and drive us all into the mess where we are now, with superinflation, people being silenced, and a demoralized country. And if you need proof of this country being demoralized, we can't recruit enough people into the defense force. That is a very powerful litmus test, whether you like the military or not. When a country is united and it flies and it works under one flag, arguably we work under three flags in Australia, people will line up to serve that country. When a country is demoralized and doesn't have a sense of direction or a sense of purpose, its military cannot recruit. And that's where we are now. I can show you the collapse of the fiscal system through inflation, and I can show you the collapse of the morale of this country through low recruitment numbers. We need big change, and hopefully we see it in our lifetime.
Yeah, indeed. Well, it is just worth reflecting. To put this slide up 1 second. The primary vote is relatively low, from around 33, 35, give or take. That's a bit out of date now. But there are all these other parties here. Tarek made a really interesting point, and that is, if you are someone that would like to send a message to the Aussie major parties at the ballot box, do your homework and give someone else your first preference lower house vote, because for every first preference vote they don't get, they lose $3.386 in funding from the AEC. So there you go. There's a little bit of thought there in terms of one observation. The other observation I just want to leave you with, I don't know whether you know, but today was actually Cash Out Day Australia.
Yeah, I
And
saw that.
interestingly, quite a few people did draw physical cash out and use it. And I just want to underscore, specifically now in the world where so much is changing and where digital is so much part of it, that actually there is really an important role for cash in all of this. And one of the things that I passionately believe is we need to protect cash, because without it, when the power goes off, you can't transact and all those things. But interestingly, I've not seen one observation, one comment from any political party on securing cash for the future. And I thought that was a major problem in terms of the current debates. And for me, I'm certainly passionate about the future of Australia. For me, the future of Australia needs to be also one where cash is still available for use, because it's a very important part of the freedoms that we have or had and continue to value. So just a couple of closing observations from me. And as we come to the end of the show, Adam, any final thoughts or observations before we tie the ribbon on this one?
Then I muted myself. I just want to commend you, Martin, for your tenacity and curiosity in this ever-evolving fiscal space. It is no secret that when you first heard about Bitcoin, I don't think you were as much of a fan of it as you are now. I don't think you've been completely converted, but what is absolutely evident is that we need people like you who have the courage to ask the questions. You don't have to even believe what you're hearing, or you don't have to submit to what you're hearing. But I think we need to be in a position where we can just speak and be heard. I think we also need to be in a position where we need to understand that 3 minutes of learning a new technology is not enough. You need more time to understand this technology. And if you don't understand the new technology, just go back to the old technology. What is money? Where does it come from? How does it operate? And once you understand what the money is now that we're using, you can understand, well, perhaps what the solution is. So the work that you're doing is very important. I commend the efforts that you've made in learning about Bitcoin. I commend your efforts for what you've done in committing to Australia, even after you've left. And I'm also very grateful that you've given me a platform to speak to your audience and to the audience out there. I'm an Australian veteran, and I feel I can give more service to this country in front of a camera and behind a microphone than I ever could carrying an assault rifle and a grenade launcher. My service is to this country. I am showing you an alternative, not to make any more money for myself, but to help you break away from this broken system that we are all held hostage to.
Thank you very much for that, Adam. And I value your opinions and commentary on this channel, and I know a lot in the chat do. That the point of this channel, just to be clear, is to put different points of view, different opinions, and to have a debate about issues that should be being spoken about but aren't being spoken about. And the reason I focus in on Australia is partly because I spent 30 years, great years in Australia, and really love the place. I've also, of course, got my surveys and things going, but I also believe that Australia is in danger at the moment. It's in danger of actually crueling the dream that Australia once had. And over the time that I was there, I saw things falling apart. I saw some of the things that had made Australia great just disappearing. And I also saw a political system and a financial system that was trapping people into a debt machine, which meant that they would not have a way out. And that's what we've now become. So I'm worried about the societal and social issues that we're seeing in Australia now. So we need a change. This election is an opportunity to really think hard about where you put your vote, to try and actually help steer. But my agenda is simply, I want to have debates, commentary, opinions and views, and help people to sort of think through some of these issues. I'm a philosopher and I'm very interested in the ideas, but I'm also interested in the solutions. So thank you very much for coming on. I look forward to the conversation. We'll have another one. I sometimes come on your channel, you come on my channel. We'll do it again. And I say thank you very much for coming on tonight.
Thank you, Martin. Good evening.
Thank you very much. And I'm going to take Adam offline there and say thank you for everybody for the comments, the questions, the super chats, and for the debate we've had. Very interesting. And I really appreciate all those who spent some time with us this evening. The dogs are still here. We had a few barking rounds, which is why I muted and then didn't unmute myself. But that's just part of the show. And just to tell you that there will be another show next week. I think it'll be a proper related one, and keep an eye on who will be my guest, because there's a couple of options there that I'm just pursuing at the moment. Anyway, thank you very much for spending some time with us this evening. Hope you have a good evening, and I'll look forward to seeing you next time. And of course, check out my recorded shows published every day of the week, Monday through Sunday, and as well as the recorded shows. We do the live shows on a Tuesday. Thank you very much. Take care, and we'll see you next time. This is Martin North from Digital Finance and signing off. We'll see you next time. See ya.